What do you do if you have a thin credit profile? That's what we're gonna cover in today's video. Let's dive into it. Okay, so I can't tell you how many times I get asked on a weekly basis, hey Jay, I've got a thin credit profile, what do I do? I only have 2 trade lines, whatever. Insert some variation of I have a thin credit profile. What do I do? That's what we're gonna cover in this video. So first off, let's define what a thin credit profile actually is. Now, Experian has probably by far the clearest explanation for what a thin credit profile is. 5 accounts or less or fewer reporting is considered a thin profile. Now, some people want to debate this, 4, 2, whatever. All it really is, in short, is that we don't have a lot of history, don't have a lot of accounts, and we don't have diversity of accounts, meaning that we don't have installment loans and mortgages and auto loans and revolving credit cards and all this stuff reporting for a really long time. Because obviously, if we look at what gets us an 800 credit score, I just showed you in a recent video a hack of somebody within 60 days getting all the way up to an 800 credit score. They went up, their credit score jumped over 700 points in a matter of one statement update because they were added on to 3 AUs. That was it. That was like the whole game, right? So anyways, we're gonna talk about what do you do with a thin profile and how do you beef it up, right? Now, the page that you're seeing in front of you, best trade lines for bad credit, this essentially isn't just for bad credit. We've covered this in videos in the past. We recently redid this entire page, but it breaks down all the different credit builder options that you've got. So we're gonna reference this here throughout the video, but let's dive into it here. So we've now defined what a thin credit profile is. It just essentially means that you have too few accounts to create a full picture of credit worthiness for potential lenders. That's it. That's like the technical version of it. It also might mean that you have none. So you have no credit score because you have no trade lines, nothing being reported to your credit profile, okay? So those are what we're considering a thin credit profile. Again, we're assuming that you don't have derogatory accounts or late payments or anything like that going on. Okay, what's our options to fatten up our profile? Well, I got 7 for you. So if you're feeling lost or confused or like there's no options for you, well, you got 7 options in front of you that we're about to cover right now. First one, authorized users. We just touched on this briefly. Family, friends that have, set up long established credit histories for, who knows, 3 years, 10 years, 20 years. I mean, some of my family's got cards that are, 20 years old. And as long as the payment history is great on those and the utilization is below 10%, add it on. Now, if you don't have family that you can do that with, let's say you're a whole family of immigrants who've come over here and none of you got credit, well, then you're gonna have to look at buying access to somebody else's AUs. This is kind of somewhat slimy business still, only because first off, out of the gates is even if you're added onto these accounts, a lot of them will only stay on your credit profile for 90 days or less. Some of them, they'll stay on for a really long time. Like I've had a few Citi accounts that still, for some reason, still show up like a year later on some older Vantage scores and things like that. So again, your mileage will vary. I don't know what it'll be for you, but understand that like 90 days would be a good amount of time to expect AU to show up for. So you've got to like kind of get this done in a small window of time. You've got to like make your whole plan, pull the trigger, fire off and get those AUs added. They get added, then you go and try and get your new credit or whatever you're trying to do with this, right? AUs are still extremely powerful. No matter how much they try and downplay these with FICO 10 and all these different models that they're rolling out, AUs are still here, okay? So they're still really, really powerful. And again, reference in the video that we just shot with somebody going up to an 800 credit score on a brand new credit profile, literally immigrant coming into the country less than 3 months, brand new credit profile going up to 800. There you go, proof is in the pudding. Okay, next, credit builders. So we're gonna break this up into 2 different categories. So these are 2 points here. We've got regular credit builders and subscription credit builders. First off, credit builders, these are usually a no hard pull credit product that's offered by a bank or institution, and the sole intention is to build credit. That's it, okay? So they're usually more lenient, they're usually more flexible, and you pay in every single month and it reports towards this overall trade line, right? And the trade line is what's reported every single month. Online payments, all that works the same. Usually these are also reported as a installment loan. Self Inc. comes to mind, Credit Strong. Look, we've got some here, Kovo, Kickoff, Meet Ava. That's slightly different. And then Lockbox, okay? So that's those options there. And then the other option would be subscription. Here we go right here. And so subscription credit builders, just to split this out on its own, are simply the same kind of idea or concept, but the monthly subscription payment that you're already making to Netflix or whatever, HBO, Hulu, whatever you're paying for now, you do it through this service and they report that as an active trade line. Now, some of these are really small, some of them are much better. Like Grow Credit, for example, we did a dedicated video on that and people saw upwards of a 50-point credit jump when they got that added and it started reporting. So that's an option that you could look at. Stellarfi is another one, and that's where Meet Ava comes in at. Meet Ava actually does report as a $2,500 credit line, which is the largest out of the group. We did a dedicated video on that as well because somebody recently got that added to their profile. So those are options you've got there. Lots to do there. And the rent thing, even though I don't have that listed in the 7 here, you could get your rent or utilities added as well through your landlord. There's a lot of different options there. Let me just show you that really quick. Utilities, we can go through Experian Boost or eCredible. And then for rent trade lines for you to do yourself, you got Rent Reporters, Boom Pay, Rental Karma, Level Credit, Rock the Score, Credit My Rent, and Payment Report. And then there's a bunch of different options on the landlord side. So like I said, there's a lot of different options here, okay? So if you're thinking that you're lost and there's nothing to do and you're hopeless, just floundering in the ocean by yourself, you're not alone. We got you, okay? So next is you could do secured credit card. This is very simple. We dictate what our limit is going to be. So we put up the money and secure that trade line with the amount of money that we want not only the card limit to be, but also what it gets reported as. So a lot of these, I'd say 99% of them start at $500 and go up. A lot of them cap out at like $5,000, but I've seen some crazy ones. I've seen up to $30,000 on a secured credit card. It's really just whatever you want to do. So that'd be a great way to not only, break into the door on that bank or institution and start to build a relationship there, but also too, to get another trade line reporting. Understand that just between the secured credit card piece and the AU piece, there's an entire book written about this. This was the whole guy's strategy to use with people who just got rich like overnight, lottery winners, basketball players, and famous people. He had them do a very simple process. I can't remember the guy's name. If I do, I'll put up the book right here. 2 AUs, 2 secured credit cards, bang. We're over 760, most likely into the 800s. And that starts to get them up into getting more credit accounts, larger credit funding, right? So anyways, I mentioned that because this stuff works, okay? All right, next, unsecured credit cards. So again, we just got a thin credit profile. So there's a couple different routes that we could go to actually get unsecured credit cards if you don't want to mess with secured at all. The first one is fintechs. Now there's a lot of new fintechs on the consumer side that will allow you to either go through the entire process and see what your limit's gonna be, see if you get approved, see what the APR is gonna be before you accept the offer, which would then be a hard pull, if it's a hard pull at all. Or some of them don't even have a hard pull at all. Like CrowdFit comes to mind, the Apple GM card, if we lock down our TransUnion, that's not a hard pull. There's probably 5 or 6, Gemini, there's probably 5 or 6 that you could go check out. But besides that, you could actually, we have an entire page on the website. Let me just scroll back up here and give you a little looky-do. If you come up here to soft pull offers, soft pull credit card offers, there's over 80 that you could check out right now to see if you pre-qualify. Now, again, that doesn't guarantee that you're gonna get approved, but you could get a great idea if you're gonna actually get approved or not. Now, it becomes even stronger if we start to match it up with, let's check out the recommendation engines in like our Experian account, in Credit Karma, in your Nav account, in these different accounts. Now we're starting to see that like we have high odds of this card over here. We're pre-qualling for it. We got high odds over here. Maybe we're starting to get mailers for it, right? You start to see that we can put together a really great idea and plan to actually pull the trigger and execute on those cards. So I would stick to that idea and that concept on the unsecured side, just to, again, make sure I have the highest possible odds of getting these cards because, again, I have a thin credit profile. Next one is relationship banking. So this is what I call it. All that is that we go in, we gotta have capital. We gotta have some cash flow to deploy, right? We go in and we start to build a relationship with the bank. So we go in and we set up basic checking savings. Maybe we get into some money market accounts. Maybe we get into some IRA accounts. We move over an IRA, a 401k, something like that. Or we start to set up, pledge loans with Navy Fed or something like that. And we essentially manufacture a transactional history with them. We can do that. What's funny is we can do this on a personal side. We can do this on a business side all day. And what we start to get out of that is because we have a thin profile, this is extremely valuable to use this. Now, if you've got over an 800, you got a thick credit profile already, a lot of this stuff is like kind of Mickey Mouse. It doesn't work for you. You don't need it, more importantly. But if you are falling into this thin credit profile category, then, especially with Navy Fed, we've seen now how many videos have we documented on this channel, like probably over 20 now, where people went in, did relationship banking, built a relationship with Navy Fed, got the bag, got a 20K card, got 80K maxed out on their credit cards, et cetera, auto loans, home loans, all that, right? Speaking of auto loan and home loan, that's another thing that we could do. Because again, our credit profile is just thin. So we could go get a mortgage, or if you're already planning on this, I wouldn't suggest to go buy a house just to thicken up your credit profile, but a mortgage or an auto loan is gonna show up as an installment loan, but it's gonna prove a few things. First off, mortgage is like what, 100,000 or more? Auto loan is somewhere between 30 to let's say 100, because cars are getting more expensive now. So by having that on your credit profile, it will mess up your DTI, right? But it will prove that you're able to handle a larger debt load, right? As long as we now execute on that, it's starting to report, we're paying on time. Even though that's got short payment history, it will prove that you can handle a bigger debt load. And it will prove that, like, for whatever reason, banks love to see what I essentially think is a normal human, and all normal humans apparently have a mortgage, they have auto loans, they have some credit cards, some installment loans or personal loans, things like that, right? So again, that just plays into that. And then lastly is run up limits and pay them down on existing cards. Now, what's interesting about this is there's some people to this day that swear this is how you get credit limit increases at banks like Discover, on your Discover cards. I've even heard this talked about with Apple, getting your Apple limit run up to 30K, 50K limits, is by doing this. What you're essentially gonna do is, I assume that your cards that you're using now, you're maybe allowing a couple $100 at max to report, but you're probably using it and then paying it down. And you're not even probably using it that much because let's face it, you probably got like $1,000 limit here, maybe $2,000 there. This strategy is let's start opening up the usage on that. What we're gonna do is we're just simply going to use more of that. Let's say it's a $2,000 card, run it up to 2,000. Pay it off before the statement, before it actually reports, because you don't want to report a maxed out card. That'll drop your score like tremendously. You don't want to do that. But I'm just saying, like, use more bandwidth, more width of the card. That's going to benefit you in a few different ways. Two that I can think of off the top of my head. First is that you're making yourself look better for automatic credit limit increases. But if you're going to pull the trigger and ask for a credit limit increase, they want to know that you're using the card, especially with a lot of these fintechs. You got to be using the card for them to want to give you more. And then secondly, if you want to get a second card with that institution, well, I'm already using this one and I'm clearly hitting the limits of this one. So it opens up that conversation of like, look, love this bank. I want to get, I want to do more business, but I need a higher limit. So they're either going to give me a higher limit on an existing card or give me a second card, give me another one, right? So that's why we would want to deploy a strategy like that. And then another one that I didn't even cover on this list, which would be a personal loan. We could branch that in with mortgage and auto loan. But again, that's going to report as an installment loan. And that is just another tool that you could deploy to show that you can handle a larger debt load. It helps add to credit mix, which is 10% of your FICO score, et cetera, right? But anyways, I just wanted to give you this quick list. So that's 8 things that you could do right now. You're not lost. You're not out there on your own, right? There are options for you if you've got a thin credit profile. So don't pin yourself into a corner. Continue to go out there and work. 2023 can be your biggest year. I hope it is for you. Thank you so much for watching. Comment below if you got questions or if you feel like I missed something. That's it. We'll see you in the next one. Hey, you should subscribe. 60% of you are not subscribed yet. Right there. Okay, bye.